Terrible parking, long lines for gasoline, aisles jammed with extra wide carts and seemingly dozens of people. Goods so large, you need a small flatbed cart to haul them. Every cashier line wrapping around into the aisles. Yet, it is all so satisfying. Enough bulk goods to last months for prices a regular grocer can only dream of. And the hot dogs and pizza, the payoff at the end is so worth it. This is Costco, a retailer that has become a destination, a retailer with a cult following, a retailer that just released their earnings. Welcome to the Quality Investor. In my opinion, Costco is the best bricks and mortar retailer on the planet, and it's not even close. No other retailer combines the lowest prices and highest quality like Costco, and the requirement of a membership to shop there selects for a higher quality customer. Consider this: shrink or theft plagues almost all retailers, and it is getting worse. Yet at Costco, theft is unheard of. Costco continuously rotates its products. One week, they may have Wagyu beef. Another week, they have designer jeans selling for $20. This creates a sense of a treasure hunt with each shopping experience. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. And despite the sheer number of people in the warehouse at any one moment, it always seems like a pleasant shopping experience. All of the qualities I've rattled off speak to the intense customer loyalty and massive brand power of Costco. And that is just one aspect of their jaw-droppingly wide economic moat. Economies of scale? Check. Costco's size gives their purchasers bargaining power, and their limited SKU count, 4,000, compared to Walmart's 120,000, amplifies this by driving higher volumes for fewer products. It also creates exclusivity. Vendors are desperate to have shelf space at Costco. A Costco contract can catapult small brands to national prominence. Costco is also a low-cost leader. Combining their economies of scale and the ultra-low overhead of their warehouse format enables Costco to mark up their products only 13 to 14%. Compare that to Walmart's of 24%. Now, usually, I am hyper-focused on margins, but in Costco's case, this drives volume. It also makes it difficult for competitors to match without sacrificing profitability. And the membership model gives Costco the ability to barely mark up these products. It makes up for the loss in product profitability with virtually cost-free membership fees. There is much more to Costco's economic moat. I've detailed it in previous videos. Today, I want to review Costco's latest quarter. They had a PE sitting at 61.5 right before earnings. This is a software type PE for a discount retailer, and a retailer that grows its revenue less than 10% a year, and an operating margin of 3.7%. We'll look at their earnings report and how it's stacked up against estimates. Then we'll look at Costco's valuation. This is a mind-boggling business. Its share price always seems to be way overvalued, yet it shows no signs of slowing. Do we dare buy Costco without any margin of safety? Costco closed Friday at $964.31, down 6.07%. So the market overall was not that pleased with Costco's earnings. Yet zooming out year to date, they're still up 16%. And over the last year, they're up 32.9%. This stock is still incredibly high. Costco stock falls after retailer misses on earnings, faces cautious consumers, and tariff threats. Adjusted earnings per share came in at $4.02 compared to Bloomberg consensus estimates of $4.11. Revenue of $63.72 billion slightly beat expectations of $63.01 billion. Overall, same-store sales jumped 6.8% versus the 6.38% expected, though they fell short of estimates in Canada and other international markets. Same store sales excluding fuel and the impact from foreign exchange are up 9.1%. That just means there's a lot of volatility in the fuel market right now. Yet all of this came with an economy that's considered to be uncertain right now, according to the experts. CEO Ron Vakris said on Costco's earnings call, "Our operations and merchandising teams did a fantastic job in the quarter, delivering strong operating results despite the uncertain macro environment." And I think that speaks to Costco's position as the premier discount retailer. I think in any economy, Costco will be the go-to for the consumer when there's a pinch. And the article continues here, Costco consumers are still focused on quality, value, and newness, as they have been for quite some time. CFO Gary Millerchip added, he said shoppers are willing to spend but remain very choiceful, a trend he expects to ramp up given the impact of some return of inflation and potential impact of tariffs. It's no secret tariffs are coming, and it's certainly going to have an impact on any imported goods, especially from China. I think they're going to have a much larger impact from China than Canada or Mexico, given most consumer goods, especially the ones that are sold at a place like Costco, come from China. Whereas what we get from Canada is a little bit different. It's more raw materials or products further up the supply chain in manufacturing. So all in all, I think Costco demonstrated fairly decent growth. I can understand the sell-off here though. I do think the stock is valued really, really high. And of course, I would actually like to see a larger sell-off than what we saw in the market on Friday. You can see the comparable sales data here in this chart here, but what really caught my eye in this earnings report is this. Costco currently operates 897 warehouses. Now, Costco has stated that their goal is to open approximately 25 warehouses per year through around 2028, 2029. At the close of their fiscal year of 2024, Costco had operated 891 warehouses. We're now 2 quarters in to their fiscal year 2025, and they've only opened 6 warehouses. They need to open 19 more warehouses over the next 2 quarters to reach that 25 warehouse goal. So they are actually a little bit behind in this regard, meaning we're going to see slower growth. Part of Costco's business model is predicated on warehouse opening. There's a lot of markets that they can expand into. They just have to do it. And only opening 6 warehouses so far in fiscal year 2025 tells me that the business is a little bit cautious about this economic environment. And yet, despite that, they had revenue growth of 9% year over year. A lot of their revenue growth year over year typically comes from new warehouse openings, but they had very strong comp sales. Like I mentioned, over 6%. Whereas typically their comp sales in the last few quarters have hovered around 3 to 4%. So I think they're thriving in this economic environment, yet they're still cautious about the future. Now, one big bright spot in this earnings report, however, is the free cash flow. They had $6 billion in cash from operations. Subtract out the $2.4 billion in additions to property and equipment, and we're left with $3.6 billion in free cash flow. Now that's through 2 quarters of 2025. In Q2, in the February quarter just closed, there's $1.6 billion in free cash flow. Compared that to last year's February quarter of negative $300 million in free cash flow, and you can see that they're growing that free cash flow. All in all, a very average earnings report in my view, but they did grow their free cash flow despite some skepticism about the future. And as we'll see here in a second, their valuation may not be helped by that. So now looking at Costco on my year 1 projections here, you can see they're actually tracking right in line with what my revenue projections are. Very, very slightly ahead. A little bit ahead on operating profit by about 2.09%, coming in with a 3.7% margin. Certainly nothing spectacular, but Costco's a volume-driven business. Net income, they're about 3.6% ahead. Same with earnings per share. And because of that free cash flow surprise in this quarter, we're about 4% ahead of my projections. Currently tracking towards about $6.9 billion in free cash flow versus my projection of $6.7 billion. And you can see here that $1.6 billion year over year, a nice pop given they lost on free cash flow in the prior quarter from a year ago. Starting in the middle box here, let's look at the revenue segment growth. Now, my store count for my year 1 estimate is now at 906. Remember, I said that they want to open about 25 stores per year. If they hit that number, there'll be 916 stores. But right now they're tracking to about 906. so I lowered that a bit. They're on track for roughly 87,000 members per store. That paid member count is growing at about 3.7%, which is a combination of store growth and members per store growing. They had a fee increase in late 2024, so their fees per member will be growing better this year. Typically it's less than 0.5%, but with that increase, it'll probably be at about 3.75% for this year. And with very good comparable sales numbers, we're seeing merchandise sales per store growing at about 6%. On a 10-year basis here, I have base case total revenue growing at 10% per year and bull case at about 12% per year. This really is predicated on them aggressively opening stores and aggressively growing their merch sales per store. This base case growth is about in line with their 5-year CAGR. However, I think they can outperform simply because when the economy does slow down a bit, people typically go to discount stores more. So Costco is a little bit insulated from economic impacts. They benefited greatly during COVID because of that. I saw a chart somewhere that their largest quarter-over-quarter increase in membership was in August of 2020, right in the smack dab middle of the COVID hysteria. If I can find it, I'll link it below. Overall, I can see their operating margin expanding to about 4% on the base case, given improved efficiency in their warehouse operations and overhead, and free cash flow conversion coming in to about $1.05 on the base case and $1.10 on the bull case. So coming down to the bottom here, we can see the free cash flow growth over the next 10 years on a base case is about 12.25% per year, with a free cash flow margin of about 3.2%. On the bull case, that comes in a free cash flow margin of about 3.57% with 15.6% 10-year compound annual growth on the bull case. Now, I do think these are aggressive numbers, typically more aggressive than I'm typically am in my valuations. So let's see what that looks like for the final valuation. Costco closed the week out at $964.31. That is still a staggering PE ratio of 56.3, a forward PE of 58.4. And as you can see, both of those are well above their 5 and 10-year averages. On the discounted cash flow basis, I have $489.26 for the bear case, $643.15 for the base, and $834.61 for the bull case. Now, Costco does pay a very healthy dividend, and they grow that dividend nicely, roughly about 12 to 13% per year. The dividend discount model price gives us a bear case of $832.69, $1,073.43 for the base, and $1,475.82 on the bull case. Now, there's a couple ways I like to look at Costco's exit multiple. Either I include it or I don't. And if I include it, the exit multiple is at $614.97. Those are comps of Walmart, Target, and Amazon. And with the recent declines that we've seen in the market, Amazon is now sitting at a PE of about 35.9. So this exit multiple is based on the median PE of those three businesses, which is in fact 35.9. So you can see that with a 56.3 PE ratio, Costco's well above what could be considered their peers. So you can include it, and you can see the buy price without any margin of safety at $758.47. If we exclude the exit multiple, Costco becomes a little bit more attractive with a buy price of $814. That's still a forward PE of 49.3. So let's go with the exclusion of the exit multiple. I mentioned earlier, Costco is a mind-boggling business, and this is why. It trades at an extremely high valuation. And no matter how we massage the numbers here, it is trading well above what we get for a buy price based on its discounted free cash flow. On the base case alone, we have a downside of 17.7%. And despite a very so-so earnings report, the stock only fell 6%. I do believe that Costco's business model is so strong and so sound that it deserves to trade at a premium, but it's still incredibly difficult for me to justify it when it's trading at over $1,000 per share, even trading at over $950 per share. And I say that every time I do Costco's valuation. When it was at 600, when it was at 700, when it was at 800, and it's just kept going up. So that said, I would like to see more of a dip out of Costco before I'd willing to buy more. I wanted to see it come below 900, down into the 850 to 875 range, well above that margin of safety. But right now, it's still difficult to justify buying more. I do think there needs to be more of a dip before we even consider it. And despite all that, it might be at $1,200 by the end of the year. Who knows? This is a confounding business, a confounding stock. Honestly, my hope is that this earnings report triggers more of a sell-off over the next few days and weeks, and it does come down below 900, in which case I would definitely want to scoop up some more. So we shall see. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.